Hello and welcome to Crypto Weeklies. In this video, we analyze Bitcoin. None of the content financial advice. Right now, the price of Bitcoin is hanging at around $77,500 or so. In terms of my website, cryptoweeklies.com, link at the bottom of your screen. The narrative word cloud over here over the last 7 days of crypto-related narratives. The size of bearish narrative has gone down, but what is more stark is the bullish sentiment has totally disappeared. Those resistance related narratives are popping up. Inflation related narratives. Bitcoin largely a popular narrative, but again it's uh, eclipsed by other narratives at this point in terms of discussions over the last 7 days. If we zoom it in a little bit on the narrative cloud over here, you can see that Bitcoin related narrative are, although at number one spot, it's sharply followed by uh, Ethereum related, and then US president, and then um, Cardano, and all of the other narratives are garnering significant attentions in the short term. Again, hyperliquid related narrative is also garnering traction now that hyperliquid is rising in terms of the market cap based rankings. You can see that over here. It's ranked number 10 spot over there. Coming to analyze this longer term social media attention, it keeps on dipping again. That February 2026, usually when there is a crash in the market or a short term dip, there is some heightened interest at that point. So for example, over here February 2026, even May 2022, May June 2022, you can see this over price of Bitcoin. Again, that first panic drop in the bear market garners some views. Again, same thing over here, that first panic drop in May. So the drop below the yellow line, which is typically the prior year's support level, 2021 support, uh, getting broken down in the next bear market year. Similarly over here, that 2021 support largely started breaking down in February 2020. 2025 support largely starting breaking down in 2026 time period. Now after that brief rally above the 20-week simple moving average, the price of Bitcoin is largely contending that 20-week simple moving average and the 21-week exponential moving average. That level is getting sandwiched between those two levels. uh, Coming back to the social media related low risk at this point, uh, from month to month, you can see since about October 2025, ignoring that February 2026, it's a series of lower number of monthly views for crypto related content on YouTube. Also the comments are going down. The red line is the comment, and the bars are the monthly views. Longer term market attention has been depleting for the asset class. Compare this with 2021, 62 million views at a monthly level. This is again almost coming 1/10 of that in May 2026 at around 8.5 million to 9 million views. The overall social sentiment risk has gone down thanks to that, and it's now less than 20, which is typically a good sign in the bear market, where the market has diverted the risk, diverted the attention away from the crypto asset class. If we go and try to check the Bitcoin price with respect to some of the regression based indicator, it's still again after that uh, brief period of 2 weeks where the price was above the white line, which is the mathematically derived fair value for Bitcoin using regression techniques. This white line again, wherever the price is above it, that means Bitcoin is from its historical perspective is overvalued. The white line tries to be a fair value, and anything below one standard deviation residual or this green line over here is typically undervaluation zone for Bitcoin. This is again volatility adjusted, and diminished volatility and diminished decay based functions are applied to it. Right now, if the price of Bitcoin again were to fall less than $59,500, that would be the entry point for this accumulation territory per the model. Right now, price is about $18,000 higher than that regression band. So, per this model at least, the price is not in an accumulation territory. The time weighted average price risk again is falling down now, but it's still in risk level 7. Typically in the bear market years, the risk level 7 is a precarious position for Bitcoin. So for example, over here in 2018, price spent almost from June to almost November to about 5 to 6 months spend in that risk level 7. Even in 2022, this area where from the perspective of proportional perspective of the price and the time weighted average price, again we know that in 2018 the time weighted average price was 2800 and the price was 6500. Now it's almost 10x, 75,000. Time weighted average price is 28,000. But still, from proportions, the difference between the price and the time weighted average price stays about 150%. What likely needs to happen, again not financial advice, in 2026 risk level 5 needs to come into play, risk level 5 or even risk level 6, before that accumulation, again personally speaking, makes any amount of sense. From cycle to cycle, you can see the bottom risk level is incremented by one risk level. So for example, in 2014 2015, the price was actually at the bottom was lower than the time weighted average price, and bottom was at risk level 1. In 2018 at risk level 2. In 2022 at risk level 3. Maybe this time around risk level 4 or risk level 5 might come into play at the bottom. But risk level 7 offers that false sense of security for months, like it did from end of January 2026 to now almost end of May. So 4 months, coming to 4 months now. Before, again, not to be too deterministic with this, but trying to introduce that kind of certainty. But again, if let's say if historical bear markets are any indication from the ROI perspective of those bear markets, so for example, we go with 2026 ROI for Bitcoin is negative 13%. Compare that with 2018. Again, at this point, again, the initial breakdown, we have not seen that initial breakdown like there was in early part of May. The next window is again early part of June, if there is some correlation among bear markets. This bear market, again, even from the 2020, 2018 and 2022 perspective, is largely again holding up better. As again, one could try to rationalize is that the first panic drop already occurred in that February zone like it did in 2018. So rather than comparing with 2022, we compare with 2018, and this volatility lasts after that first panic drop like there was in February. There was this series of lower lows, again that hasn't manifested yet. Maybe there would be some divergence between them, but largely speaking, if this follows, again at this point, again it's about 50% volatility of what again not just 50%, again only 25% of volatility what it was back in May 2020 2018. Now in 2026, 8 years later, at the bottom the ROI was about negative 75%. Taking a 25% of 75% would be at the bottom. Again, the hopeful scenario for Bitcoin would be only 20% down to 25% down. That would be 1/3 of the panic that there was in 2018. If we go 50% down, that means 50% less volatility than 2018, then the bottom for Bitcoin could be 40% down from the yearly open. And yearly open for Bitcoin over here, you can see that was close to 90k. Let's take a rough estimate of 90k, and 40% down from 90k level would be, again deducting 36,000 from 90,000, would be at around 54k. And that level 54k for Bitcoin is kind of important with respect to the 2024 area of support. Again, this bar zone, so this parallel channel for Bitcoin, if we go by the 2024 area where the price essentially broke out in March 2024 and then spent the rest of summer in 2024 in this box zone, if in 2026 we visit that area, the entry point of that area is 71k, which we visited and went to the middle part at around 63k in that panic drop of February. The bottom of this zone is around 54k, and that again aligns well with that ROI based calculation that I just presented of diminished volatility, but still drop in the next half of year 2026. If that bear market kind of manifests, then the machine learning based prediction for Bitcoin in that zone in the next 6 months is again support level without any panic for in the next 6 months for Bitcoin is between the current price and about 61k. if there is, unfortunately, if there is 1 month of panic, we don't know when that 1 month would happen. That essentially we are looking at around $10,000 drop from that 61k. That the drop ranges from somewhere between 51k to 61k with 1 month of panic or 2 standard deviation bear case. This model is trained on about 11-12 years worth of data since 2014, uses time series forecasting techniques such as seasonal ARIMA, LSTM, and standard deviation based confidence levels over here. So if you want to leverage all of these models, they are all available for free, no signups required on cryptoweeklies.com. You can also have leverage this chat-based assistant. We have just launched that localized LLM, where this LLM is only trained on what was discussed on this channel over the last 3 years on this YouTube videos based timestamps of about 1200 videos worth of timestamps, and also my personal thoughts and whatever is available on this website. So it's all localized LLM. So for example, if we ask this LLM, give me everything on Bitcoin, let's see, and it tries to scope out everything. So for example, over here, I know it's currently at around 78k, and it did break that 80,000 mark, and which was its mathematically derived fair value, as we discussed, close enough to that. And now it's testing the 20-week simple moving average, which we saw over here at the start of the video. Then again, the macro risk baseline of time weighted average price is close enough to $30,000, and it was fluctuating in the last couple of weeks between risk level 7 and 8, which is about 170% premium over that baseline, which indicates a heightened macro risk similar to 2018. So downside targets, again based on that sell in May kind of analysis that we did in previous videos. If there is a 50% drawdown from the yearly open, then the floor is at around $45,000. Today we discussed about a potential scenario where instead of a 50% drawdown, a 40% drawdown gets price of Bitcoin close to 54k. The deep value zone is at around 300-week simple moving average, which is again at around 54k. This is the blue line over. The blue line is the 200-week simple moving average, which is at 61k. The green line is at around 54k. The green line is the 300-week simple moving average. The last bear market concluded at around 300-week simple moving average at the floor. Even in that March 2020 panic drop, the support level was the 300-week simple moving average. I'm not saying that the 300-week simple moving average needs to be tested every single bear market, but at least the 200-week simple moving average might come into play at the end of the bear market, which is at around 61k. With all of that, again, you can check out again. Right now, the bull targets and the base peak are not discussed in this prompt, but let's say if we add another prompt over here, say Bitcoin forecast, please. Let's say, what does it say? All right, so this again tries to sandwich that the result between only the time weighted average price baseline, let's say BTC, bull case and bear case. So bull target, again, it sources from this area over here from the website itself, and moon goal from another scraper that we have, and that's the bull case. And let's say bear case for Bitcoin. Okay, that's still providing the data from that macro floor, but what we can do is conclude it with that estimated bear market bottom. Again, right now it's at around 41k, which again right now looks quite pessimistic, but that includes a drop to the time weighted average price, which is again once in a blue moon kind of event. Bitcoin doesn't drop to that level, hasn't been dropping to that level at the end of the bear market since 2015. So again, I know that the calculation for time weighted average price for that model is slightly different from the 12 years worth of data, which start somewhere for this calculation at 2017 instead of going all the way to 2014. That's why there is a discrepancy, and that's intentional to help analyze not just Bitcoin but all of the other rest of the asset class, which started coming into fruition in that 2017 rally. So largely all of these newer assets have that launch floor at around 2017 time period. So all of this, if you want to leverage, you can give this video a like and subscribe to help the channel and the community grow, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.